Okay, for those of you who like Wyckoff, this is essentially a Wyckoff accumulation pattern. But I'm looking at this through the lens of purely of Elliott wave theory. Okay, so you have your A wave, you have your B wave, right? You have that impulsive portion of the B wave, and then again, remember your three waves, and then your three waves. So your C section starts here. Your C section starts here. The A, B, C. Okay, so this is where I like to get in, right here. Okay, A, B, C. I like to get in at the pullback of this impulse right here. However, why did I bring your attention to this date? It's because getting in on the pullback of this would have been a bit problematic. Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 11th, 2022, and Bitcoin is looking like it's printing a reversal pattern. We've said this many times before. These are quintessential patterns. They're something that you see anytime price wants to reverse on any time frame. So we're going to go over this again. It's crucial. It's part of my main trading strategy. I'm a reversal trader. I've made a lot of money following these patterns and really honing the skill of identifying these patterns. And even when it's not a long-term reversal, for instance, here in the wave 4, incorrectly identified as a bottom, I still left with a little bit of profit because I was able to trade when price was going to break to the upside given these reversal patterns. So they're very powerful. So that being said, assuming this is indeed the bottom, okay, and 37.9 or whatever is the bottom of our wave 5, and we have 5 waves, we're anticipating a reversal for a large sort of uptrend, for a large time frame reversal, right? Not just a small time frame reversal and then turn around and dump again. But here is what I'm waiting for. Here is what I'm anticipating for before taking my next trade, okay? My next big trade. I'm not really into scalping right now. My position size is too large. I've notched it up in anticipation for this big run, right? Because I'm anticipating Bitcoin go back to between 55 and 58K. So I'm increasing my position size. I'm being more conservative. I'm not scalping as much. So talking about reversals, here's what we're seeing. And as always, you see an A wave, okay? Basically, these corrective waves are in 3, okay? For those of you that are new to the channel, welcome. Corrective waves in Elliott wave theory are in 3. Impulsive waves are in 5. It doesn't matter the direction, but 3 and 5, those are the numbers, okay? So this A wave, again, 1, 2, 3. Okay, that's your A wave. Your B wave, 1, 2, 3. That's your B wave. Okay, and here, what you're printing now, and we're on the 5-minute time frame. You need to go on small time frames to see all of this. Let's see. Actually, you know what? This is the proper count of the A wave. Why? Because it goes A, B, 1, 2, 3, 4, 5. Okay, these are 5 waves. I know that because I counted them and I traded these 5 waves. I traded this up. I took profit there. So I know that that is a 5-wave structure. I studied that. Yeah, right here. 1, 2, 3, 4, 5. Okay, so your A wave ends here, right there. Boom. This is your B wave. A, B, and you're going to get a C. Okay, the C is the impulsive portion of every one of these 3-wave corrective waves, be it A, B, C. They look all manners of waves, right? They can be flat corrections, they can be zigzag corrections, they can be expanded flat corrections, but they always have 3 components, 3 waves, A and a B, and the C wave's always impulsive. Okay, so the last wave is always impulsive. So if this is an A wave and it is its direction is up, right? B is going to be counter, its direction is going to be down, so its impulse is going to be down. Okay, so that's basically what I'm waiting for. So here's your A wave, your 3 waves down, your B wave is going to be whatever. It can look like anything, right? So this is why it's hard to trade these corrective waves, and it's probably not a good idea. They're not high probability trades because the variations on what they can look like are so large, it's hard to anticipate, right? Not a good idea to trade. Anyway, looking for 3 waves here for B of B. So then C of B, we're going to know. And C of B, let me just clean this up, should take us to, at minimum, wave C of B should take us to, at minimum, here, 41K. Why? Because we know that a flat correction retraces to a minimum of the 0.5 Fibonacci retracement. So between the 0.5 and the 618, but it can also retrace between the 786 and the 123, which is a regular flat, or it can retrace all the way to the 1618, which is an expanded flat. Okay, so let's delete that. So basically all I'm saying is B can look like this, it can look like this, or it can look like that, and it's still a valid B wave. Okay, but anyway, we want to look for an impulse like that in the B wave before saying that the B wave is complete. And just a quick example, you can see this if you look at your charts. If you study your charts, you'll see this everywhere. Like I said, this pattern is universal. It's invariable in terms of its printing for price to reverse. Okay, so you see here in our wave 4, A, B, you see that impulsive wave of B right there, and then followed by a flat correction into what I call the C section. Okay, I'll get to that in a bit. So basically, first I need that to be printed. Okay, and then once we get this B wave, what I'm looking for is this. Okay, basically a flat correction, first in A, so 3 waves up, 3 waves down. So it's going to be a smaller sort of, what's the word I'm looking for? It's going to be a smaller scale, all right? A flat correction into an impulse. But, after A, after B, you need 5 waves. You need pure impulse. However, what's important is these 5 waves that you're going to see at the bottom, that come at the bottom of B, they're going to be followed by some waves down, some 3 waves down. Why? Because after 5 waves, you need 3 waves, okay? And so you're going to get a B wave. You have to get a B wave after this, because after 5 waves, you get 3 waves. You need 3 waves. So this, be careful on buying this, because you might get this, and this as a B wave can retrace once again to anywhere between the 0.5 Fibonacci retracement to the 1618 of this. So sometimes this C wave, right, fully impulsive, which becomes an A wave, has a retracement that's lower than people expect, right? Because it goes to the 1236 or the 1618, right, as an expanded flat or a long regular flat. So this is my my technique, and I've talked about this before, but it bears repeating. Again, this is what I'm looking for before getting into a trade. I'm trading 5 figures. I'm trading some serious money. I'm not looking to get stopped out willy-nilly. I'm looking to take a high probability trade. And the high probability trade is, once again, after this B wave prints, we get 5 waves up, right? But that becomes an A wave. It's fully impulsive, but it becomes an A wave because it's going to be followed by 3 waves. And then we get an impulse. So it's small a, small b. I call this the C section. Not the C wave, but the C section. I didn't mean to do that. C section, okay? So I'm going to get 5 waves here, 3 waves there. I don't know how far these 3 waves are going to retrace. It could be a zigzag, right? It could be something like this, right? Who knows? It doesn't matter. I'm just waiting for the 3 waves. This is where I'm paying much attention, very close attention, and I'm buying the pullback here, okay? And that is where I'm entering for a possible continuation all the way up to wherever. Now, caveat, even when you do buy this, be careful. All of this can turn into an A wave. Okay? That's possible, and I'm going to show you. We have a precedent, and I'm going to show you what happened, and this is the last thing I'm going to talk about. And we can go over this a little more during the live stream today. Today there's a live stream. It's going to be a little later than usual today because I have an appointment at 5. So let's do 6:30 for the live stream, 6:30 p.m. Eastern Standard Time. I'll see you guys then. But let's go to the last time we reversed at this same level, okay? It was September 20th, 2021. Okay, let's see. September 20th, something like that, right? We were at 41K. Okay. And let's see what happened. Let's see what price looked like. I know we're here. Question is, where is it? Okay, this isn't working. Let's do this way. Okay, right here. It was, yeah, September 21st. Okay, so let's zoom in. Let's see, 15-minute time frame. Actually, let's keep the same time frame. Let's keep the 5-minute time frame because we were looking at that, and we're kind of, our eyes are used to looking at that time frame. So September 21st, right? Perfect. Go in the 5-minute time frame, so you see the scale is the same. Is this no? Okay, let me do this one more time. Boom. Okay, let's. Okay, here it is. Okay. So September 20. No, this is November. It's populating. This is in the 60s. Damn it. All right, let's go on the 15-minute time frame and we'll adjust our eyes, okay? Sorry, this is a bit... Okay. Good enough, yeah. So here we go. Here's what I wanted to draw your attention to. Here you see, once again, the anatomy of a reversal. You have your A wave, right? A, B, C, that's 3 waves. That's your initial wave that signifies that a reversal is in play. Okay, for those of you who like Wyckoff, this is essentially a Wyckoff accumulation pattern. But I'm looking at this through the lens of purely of Elliott wave theory, okay? So you have your A wave, you have your B wave, right? You have that impulsive portion of the B wave. And then, again, remember, your 3 waves, and then your 3 waves. So your C section starts here. Your C section starts here. The A, B, C. Okay? So this is where I like to get in. Right here. Okay? A, B, C. I like to get in at the pullback of this impulse right here. However, why did I bring your attention to this date? It's because getting in on the pullback of this would have been a bit problematic, right? And that's why you always use good risk management. As soon as you can, try to manage your trade in such a way that you set your stops into profit, okay? So that you're not caught unawares, because nothing is 100%, okay? And as a reversal trader, everybody's trying to catch bottoms, right? You're trying to catch a bottom, but you don't want to get you don't want to get sort of caught unawares. You don't want to get sort of in too early. So A, B, C, I'm getting in on the pullback here. I would have probably set my stops as soon as that impulse went a little bit, set my stops into profit. So remember to do that. But again, this whole thing is now turning into another A, B, C. So that was kind of, you got C wave, and that was a pullback. You thought you were good, but you got a huge retracement. What this was, I don't know. But, the market's always right. So it's basically giving you another B wave, another correction, making that C wave that's supposed to be fully impulsive into an A wave. That's what I was talking about. So just get ready, put your stops into profit, because you never know. If you get another B wave, then you got to do it again. A, B, C, you get in on the pullback, and then you're golden. Okay, so that's basically what I'm waiting for before getting into another long with Bitcoin. This is the anatomy of a reversal. As I said, it is universal. This is what happens when price reverses, and this is how you get what we like to call in trading a rounded bottom. If you look at it on a large time frame, you see the bottom is round, and that's what you invariably see in reversals. I also like to call it a pitchfork, right? On larger time frames, if you zoom out, you see that you get pitchfork reversals. Okay, hope this was helpful. Hope this was useful. As I said, I plan to go live at about 6:30 p.m. Eastern Standard Time, because I have an appointment at 5. So the usual 5:30 time isn't going to work today. I hope this was good. I hope you guys are safe, trading well. Remember, risk management is everything. And I'll see you guys tonight. Have a good one.